when you come on Thursday, it's game on.
Because we all get to decide.
The business, the way to shoot the video.
Hey, welcome to the Jazz Tackar Podcast, episode 246, the number one podcast for real estate professionals on doing more deals and creating a business around their life, not the other way around. Today's topic is going to be all things current real estate market, specifically in the GTA, meaning the Greater Toronto Area. However, if you're a real estate professional, a home buyer, a home seller, or an investor, I'm going to be going into the high-level metrics and market indicators that you want to look for as a home buyer, home seller, or investor, and that you can use right across the world. In fact, there's one market indicator that I've been looking at for over 20 years, and you can throw me in any city in the world, and I'll tell you what's happening in the real estate market just by this one market indicator. But before I go into the meat of today's episode, I want to quickly touch on the giveaway that we do on every episode of the Jazz Tackar Podcast, which is a 10-minute free coaching call with me live on the podcast. And it's very easy to get a chance to win that. All you got to do is watch this episode. And instead of making you wait till the end, I'm going to tell you how you can possibly win that free 10-minute coaching call with me that we will be doing live on the Jazz Tackar Podcast. All you have to do is go to ftguacademy.com, ftguacademy.com/call. Put in your information. My team and I randomly pick someone for every episode, and guys, you're going to love it. In fact, if you watch till the end of this episode, you're going to see this coaching call unfold. And I never know what the person's going to ask me, but I'm going to bring them as much value as I possibly can. But as I mentioned, let's go into what's currently happening in the real estate market, because I have a little over 12,984 investors, home buyers, and home sellers in my community. My real estate company is REC Canada. It's been a list of home buyers, home sellers, and investors that I've been cultivating now for over 20 years. They're known as my REC insiders. Even if you're a real estate professional, guys and gals, and you want to start getting our communication through email, all you got to do is go to recinsiders.com, fill in your information, and you will be getting our bi-weekly newsletter. But to those 12,984 people, I needed to make sure that, yes, my podcast is to help real estate professionals do more deals and help them create a business around their life and not the other way around, but I still sell real estate. And I have a vested interest in you getting educated about what's happening in the market. Now, I want to preface everything I'm going to be talking about today when it comes to the current market and where some opportunities may lie with what I'm about to say, which is, no matter what, I always get the question, well, when is the right time to buy? And my answer for 20 years has been the same. The right time to buy is when you're ready. Not when the market's going up or down. And why? Because you can never time the market. There is people who are a lot smarter than I am, and most of the people who are watching and listening right now are not one of the major economists in the world, who also get this wrong in terms of trying to time the market. You cannot time the real estate market. You can't day trade in the real estate market. This is not a stock. The real estate market does have trends, though, and I'm going to be touching on those. But I want you to understand, if you're a first-time home buyer, maybe you already own a property and you're thinking about what I call smart sizing, meaning moving up into a bigger home, moving into a smaller home because you're an empty nester and the kids have left and now it's time to downsize. Maybe you're an investor who wants to create wealth using the vehicle of real estate. And you're thinking, well, when is that time for me to buy? It's when you got all your ducks in order. And the ducks meaning your financial situation, your down payment. You have the ability to go get financing from the lender because you always want to use other people's money. That beautiful acronym of OPM, because you can leverage. You don't need the full purchase price in terms of the capital in your account. Meaning if you're looking at an $800,000 property as an investor in our province here in Ontario, you need 20%. So you need $160,000 plus closing costs. As a first-time home buyer, I recommend, yes, you can get financing with 5% down. I recommend that you at least have 10% down because it makes it a little easier in terms of your carrying costs, your mortgage payment, your property tax. If it's a condo, you obviously have condo fees or strata fees for my friends and family on the west side of Canada. So at bare minimum, you want to have 10% down. That's one of the ducks that you need to have in order. The second one is the stomach for it. Because when you own a property, well, you are obligated to make those monthly payments that I just mentioned. And if you're an investor who's thinking about possibly refinancing their property and pulling out equity, well, to grow your portfolio, which is a fantastic way to do it, you gotta be able to take on that risk. And at times, the rates go up. Maybe the tenant doesn't pay a month. You can't lose sleep over it. If you are, and this is coming from a real estate broker for over 20 years, I don't think real estate investing is for you. I don't think owning a home is right for you. And I don't mean that sarcastically. Especially as a first-time home buyer, you don't need to own where you live. It's a very good strategy to own a home and build equity because over time, the values are going to go up. I'm going to talk about historical data, which all my stats come from that perspective. It's not me pontificating. It's not me trying to be Nostradamus and telling you what's going to happen in the market. It's going to be based on historical data. And history being, in my opinion, our best teacher, gives us an indication of what's possibly going to happen in the future, especially if it's a trend, right? If it's happened a few times, at certain times, chances are it's going to continue to happen. But if you're someone who doesn't have the stomach for it in terms of understanding that you need to make the monthly obligations, or you don't have the financial means to do it, it's okay to rent. You need a place to live. It's okay to rent where you live. I do think, though, that you find ways to help you get out of the rat race of a 9-to-5 and or understanding that in Canada, the Canadian pension plan might not be around in 30, 40, 50 years. One way to protect yourself is, even if you're renting where you live, is to get an income property. Find out the strategies. We're going to have a couple of episodes in the near future where I speak about those strategies. But I really want everyone to hear this because this is obviously being recorded. You don't need to own where you live. I do highly recommend, though, that you buy income properties that you can rent out because that will help you to protect yourself in the future. It also protects you against inflation, what we're going through right now. And so there's a lot of benefits to owning income properties. There's also a lot of benefits as a person who's renting to get into your property because it makes it a little easier to build some wealth, right? In terms of, yes, the value goes up, the mortgage gets paid down, that middle portion is called equity. And so at least if you don't invest anywhere else into stocks or into income properties, your principal residence where you live, and if you own it, that could be a nest egg for you for the future. But let's go jump into what we're currently in terms of the real estate market, and then I'll touch on where I think it might be heading in the next 6 to 9 months. And then at least you have black and white numbers and facts so you can make a quality informed decision moving forward. Now, as a real estate professional, my real estate agents and my mortgage brokers, very important for you to understand these stats, understand what's happening in the market so you can help educate your clients, not convince them, not try to sell them. Your job is, and this is again coming from the guy who's been doing this for 20 years at a very high level. I'm not trying to flex, as the kids say. I'm just giving you some data so you understand where all this experience is actually coming from. Do not try to convince people that this is a great time to buy or sell, or do whatever is in the best interests of you as a real estate professional because you get paid. The way that I built my business is just giving people facts and then letting them make the decision on their own, because it's not my money. It's their money. And you don't want to have a client in the future that has buyer's remorse. And guess who they're going to blame? You as the real estate professional, because you were being pushy with them. The stats that I have in my hand right now, these are just black and white numbers, period. In fact, team, big shout out to my boys, Clyde and Bobo. Just in the comments right now, if you can put the word, put this link in here, because I want to give everyone the stats that I have in my hands. The easiest way to get it right now would be to email me at info@jazztacar.ca. Email me, info@jazztacar.ca, and in the subject line, just put the word stats. Subject line stats, email me at info@jazztacar.ca. For anybody who's watching live or the recording right now, I'll make sure I get you the most current stats, which is we are May, what are we at today, guys? May 10th, okay, at the time of this recording. The stats that I'm going to be covering is for the end of April. So it's the most recent stats. In fact, they just came literally into my inbox a couple of days ago, and it's a perfect time to kind of go into it. Now, I'm going to dive into some of the micro markets, which is very important for you to understand. I'm going to start with more of a macro market of the greater Toronto area. But wherever you are in the world right now, understand this one thing. When you're buying, selling, or investing into real estate, do not look at the macro market of your country or even your city. You want to look at the micro market of where you're either selling or thinking about buying. What constitutes a micro market? I like to think of it in a 5-kilometer radius. If you can hone in even closer and zoom into like a 1-kilometer radius, that much better. But you might not have enough data that is recent in a 1-kilometer/1 mile radius. And what I'm looking for is a bare minimum of, I would say, about 15 to 20 sales in a 30-day period. You might not have that in a 1-kilometer radius for the type of property that you're thinking of selling or buying. You're not going to have what we call comparables. And that's how you actually determine value. In real estate, it's determined by one way and one way only from a residential perspective, which is the most common way. I shouldn't say it's the only way, but it definitely is the most common way. We use what's called comparables. And if there's something that you want, if there's a line that you want to recite as a home buyer, home seller, or a real estate professional that's speaking to clients, is that the asking price is irrelevant of a home. Let me say that again. the asking price of a home is irrelevant. Sometimes sellers and their real estate agents ask too low on purpose to entice more people to come in, which will then inevitably get more offers, which will inevitably get a higher price and a cleaner offer without any conditions. Sometimes, depending on the market situations or the property, sellers and their real estate professionals ask too much. They ask too much based on what other properties have been selling for in that 1, 3, 5 mile radius in a 30, 60, 90-day period. So what is relevant? If asking price, Jazz, is irrelevant, then tell us what is relevant. What is relevant is what things have sold, what properties have sold that are similar, because that tells us what a ready and willing, able buyer was okay to write a check for. And when you have a minimum of 3 to 4 of those comparable properties, now you can determine value. So if you're looking for a home right now, you're thinking about selling a home, do not ask your agent and don't care about what other people are selling it for. Yeah, that's kind of your competition on the market, but it doesn't really matter. What you want is to get a list of solds, especially if you're looking for a property, because what I know is common practice in the industry with clients is to give people all the properties that are available so then they can go out shopping. But the problem is that the buyer's not educated enough to know what it's actually selling for, which might be more than what people are asking for and which might be less. And so either as a real estate professional or as a buyer or seller, what you always want to get your hands on is the sold properties. Because now, as you're seeing properties, you'll be able to compare to what has sold. Well, this property is a little bit more superior because it has a bigger lot. Maybe it has a nicer kitchen. Maybe it has more rooms. Maybe it's inferior because of the fact that it backs onto a cemetery. And no, that is not a place that you can start saying that you're going to have quiet neighbors. I know people try that shit. Okay? That is going to be an inferior property. So you need to make sure that you get your hands on what has actually sold. Because the stats that I hold in my hands are true stats. We know exactly what the average sold price is now. We know exactly what types of properties are selling. We know how long they're taking on the market. We know how much inventory there is. We know the historical data when it comes to the sales. And so those are true facts. But if you're on the road right now looking for a property, what you want to do is make sure you know what properties are selling for. So as you put in offers, you know how to negotiate a little better, a little stronger, because you know what properties have sold for. So let's go into what's happening in the GTA. I'm going to start with the macro and then I'll jump into the micro. So from an average price perspective, right now in the Greater Toronto Area, and this is an indication to most people why the average in a macro area doesn't matter. And I'll explain what I mean. The average price right now is $1,112,000. So it's safe to say it's $1.1 million. Now that is all properties, condos, townhomes, semi-detached, and detached homes in a 75 to 80 kilometer radius. So what people hear, now you as a home buyer and a home seller and a real estate professional, it's important for everyone. What you hear is, I guess all the properties on the market right now are about 1.1 million. No, that's the average. That means there's properties at 2.5, 3 million. Then there's still properties at 600,000, 700,000. But we see it in the headlines. Well, the average price is 1.1 million and it's not affordable. Well, yeah, sure. I mean, There's certain pockets in the GTA that are superior because of the location. And they're just nicer homes. Some, not because necessarily they're newer, it's generally based on location because they're closer to amenities, including transit and schools. So if you're looking right now or thinking about possibly purchasing because you're a tenant that might be a first-time home buyer, there is still properties for $700,000 and $800,000. It might not just be the beautiful yard with the white picket fence and a 3-bedroom home. It might be a 1-bedroom condo that you might need to get started at. And I understand that that's not what your dream home is. But your first property should never be your dream home. You have to work your way up to that. And the way that you do that is start small. You start with a 450 to 500 square foot condo. But Jazz, I got kids and I got, a partner. Okay, so maybe we have to go to a 2-bedroom condo. Maybe we have to go to a location because you do need a townhome, something a little bit larger, you need 3 bedrooms. And it's a little rare with condos. Well, then maybe you can't be in the central location of downtown Toronto. You have to drive till you qualify. You have to drive till you qualify. You got to find a location that might be a little further out, and now you have to travel a little bit further to get into your first property. I know that's not what you wanted, but you don't always get what you want when you want it. You just have to work your way up to it. And so as a first-time home buyer for 20 years, and not only have I been saying it, educating clients on it, helping them execute on it, I did it myself. So I drink my own fucking Kool-Aid here. Okay? Stomach the least home possible at the start. What does that mean? Don't try to get into the 2,000 square foot home as your first property. I still own the condo that was my first purchase. A 620 square foot condo in downtown Toronto. Not in the best location of downtown Toronto. Had a crack house that just got torn down right across the street. 10 minutes away from a slaughterhouse, one of them pig slaughterhouses that every 2-3 months had a fucking stench that would kill you. I got that condo for $339,000 in 2010. That condo is worth $750,000. It's a 1-bedroom condo that both my wife and I bought. Had my first kid in there, lived in there in a 1-bedroom condo with the crib next to the bed for a year. And obviously, as my boy started getting from his crawling to his walking, we made a move. But I was able to do that because I built the equity. The value went up in that first year from when I bought it. I was able to refinance it. I said I bought it for $339,000 worth, off the top of my head, call it $700,000. But I've refinanced that property, meaning I've pulled out money twice and bought 2 other properties with it. I'll do more episodes in the future about this. But the point here is, guys, that you need to stomach the least home possible. Did I like the fact that we had a 1-bedroom small little condo in not the best area? No, but I knew I needed to get in. I needed to be downtown Toronto because that's where my wife wanted to be. She wanted to live the downtown lifestyle, kind of born and raised in downtown. She moved out as a teenager with her family, but then she wanted to get back. It was closer to my office as well. And I wasn't able to afford the $600,000 townhome that we possibly, like one of them brownstones that you kind of see in movies of New York. We have some of them here in Toronto as well. That would have been her dream home. But I wasn't able to do that 14 years ago. So I had to stomach the least home possible. And that's, if I can just, through this podcast episode, just get you to understand that, you're going to thank me. I promise you're going to thank me in years to come. Now, the average, as I mentioned, is 1.1 million in the GTA. Now, there hasn't been much of an increase. In fact, we've only seen about, compared to last April, so comparing April 2023 to April 2024, the end of April for both those years, values have only increased about 0.3%. Now, it's nowhere near what we're used to seeing with real estate values in what I like to call the foolproof way of investing into real estate or purchasing real estate, which is in 10-year windows. Because 10-year windows, a decade, you can take advantage of what has always happened in the GTA. You got to look at your own city. But in the GTA, we have seen values double every decade for the last 100 years. So for the last 100 years, every decade, you take what the price is at the end of the decade compared to the start of the decade, they've doubled. Now, what happens in between those 10 years is interesting because values do go down, but then they go back up again, and then they come down again, and then they go back up again. And that is why I love real estate, because I know that real estate is going to go up, it's going to come down, but it's going to go upwards. It's going to keep on going up and down, upwards. And that's why you have multi-millionaires. In fact, 90% of millionaires created their wealth through real estate. Just by knowing this simple fact that the values are going to go upwards over time and that you can have someone else pay the costs, i.e. renting it out. Now, the other indicator that you want to look at, and the most important indicator in my eyes when you're looking at any real estate market anywhere in the world. This is where I said at the start, throw me in France, throw me in Amsterdam, throw me in India, throw me wherever you want to. Give me this indicator, and I know exactly what type of real estate market we're in that city. That market indicator is months of inventory. Months of inventory tells us the story of what's happening with values. What months of inventory is if nobody lists their property moving forward from today, how long would it take for all the properties currently on the market to sell? I want to say that again because that glosses over a lot of people sometimes. Months of inventory is the indicator that tells us if nobody, as of today, puts their home on the market, how long would it take for all the properties for sale currently on the market to sell? Because if that number, and I'll tell you what it is currently, but before I tell you that, I want to make sure you understand what tells us if we're in a buyer's market, seller's market, or what's known as a balanced market. A seller's market is if that number is somewhere between 0 and 3 months of inventory, we're in a seller's market, which means that a seller has the advantage because there's not that many properties for sale for buyers to look at, which increases the value. There's more demand than there is supply. So like in anything, economics 101, when there's more of something than what people want, the prices will be driven down. When there's less of something that people want, the manufacturer or the person who holds that thing, real estate, a pen, a phone, a mic, a mug, you can drive up the price. The best analogy is if anybody's been to the Scotiabank Center downtown Toronto, the guy who has the hot dog vendor right outside, he sells that hot dog for $8. If you go down the street, like maybe less than half a kilometer, the price drops to $6. Go a little bit further down from the Scotiabank Center, the hot dog price is about $4.50. Why? Well, the demand right outside the Scotiabank Center before you get inside the Scotiabank Center, because the hot dog inside the Scotiabank Center is like $20. He knows people are going to start lining up in front of his place, hence why he can sell them for so much more than the guys further down. Real estate's the same. And so if you're at 0 to 3 months, you're in a seller's market. If you have 3.5 months to about 5.5 months, you're in a balanced market. Meaning there's a good amount of people who are looking for properties and there's kind of similar supply in terms of how many properties are for sale. Now, when you go 5.5 months and above, now you're in a buyer's market. Great for people who are looking to purchase, meaning there's a lot of properties on the market, there's a lot more properties on the market than there is people actually looking for them. And so the seller of those properties has to compete. And the way that they compete in the real estate market is by driving the price lower. Now, in the GTA, currently at the time of this recording, May 10th, 2024, we are at 2.5 months of inventory. So we're slightly under that 3-month threshold, which still tells us that we're in a seller's market in the overall GTA 75 to 80 kilometer radius. Now, this is where it's very important to dive into the micro markets. Because if I look into, and the next page just happened to come up, was where majority of my paisans are and where I currently live, which is Brampton. The average price in Brampton is $1 million, so it's less than the 1.1 million in the average of the GTA. The months of inventory is practically the same as the overall GTA. It's actually 3 days more. It's 2.61 compared to the 2.54 in the GTA, which tells us, see, if I were to show you what was happening in February of this year, what we would have seen is that the months of inventory in Brampton was closer to 1.5 months, which meant that the sellers were able to sell their properties for more because buyers didn't have a lot of properties to look at. But right now, sellers have to bring their property lower price down because there's more inventory. And as a buyer, as we start to see this number at 2.61 in Brampton, if you're in the market, understand that you have more negotiating power now. You don't necessarily have to give the seller everything they want. In fact, now's the opportunity to make your offer conditional a little bit longer on financing, home inspection. Start with a little lower price based on what the solds are. You can start even a little bit less than that. And that's how you negotiate a better deal for yourself. And you could do that in an area like Brampton right now. In fact, you can also do it in an area like Toronto proper. And what that means is everything that's kind of 416, south of Steeles, north of the lake, west of I would say DVP, east of 427. You're seeing 2 days under 3 months. So you're practically at 3 months, which tells us what again? That we're in a buyer's market. I apologize. It tells us that in Toronto right now, we're in a balanced market. Great time for buyers to start coming in and putting a little lower prices on their offers right now. You can, in fact, use a strategy that I've been using with my clients for a very long time, specifically for investors. Put in more offers. Start testing it out. In real estate, just by putting in offers doesn't mean you're buying anything. As long as you have a conditional on financing, home inspection, lawyer's approval, Essentially can be conditional on Clyde's mother's cousin's father looking at the offer. You can make it conditional on whatever you want. It's just a matter of what the other person agrees upon, the other person being the seller. The average price is about $1,000,001 in Toronto, so higher than Brampton, which is quite obvious. Why? Because Toronto is the central part of the greater Toronto area. Now, Mississauga, we're seeing 2.4 months of inventory, a little less than what we're seeing in the average in all of the GTA, but you can start to see a trend. And the trend being that we're no longer in a strong seller's market. On the flip side, though, guys, we're not in a strong buyer's market really anywhere in the GTA other than one opportunity where I want to spend some time for both first-time home buyers and investors. Because in the 20 years that I've been doing this, I've had the opportunity to see windows, small windows, where real estate goes on sale. And what I mean by that is that sometimes when there's a sale on shoes or there's a sale happening at Holt Renfrew, people take time off of work to go there. Or they go during their lunch break and they'll line up at 6 a.m. at Best Buy when there's a sale on appliances and electronics. But every so often, 3 years, 5 years, 7 years, a window of opportunity happens in real estate where it goes on sale. In fact, we've been in a very strong seller's market from the time period of, I would say, about 2019 to about 2020, end of 2022. And that's when we started to see the rate increases happen, right? And in that time, as a buyer and as an investor, you were always competing against people because it was such a strong seller's market, which drove up the pricing. But where we're seeing this window of opportunity and a strong, what I call buyer's market, is in the condo market in Toronto. Because the gap is significant. Let me explain. The price gap between the average price point of a home being a semi-detached or a detached home that doesn't have any condo fees attached to it, which in real estate legal terms is known as a freehold property. The gap between those type of properties and condos right now, currently, is approximately $1 million. So the gap is large. What does that tell us? Well, what that tells us that in the very near future, meaning I'm going to venture to say in the next 6 to 9 months, like in the overall scheme of a 10-year window, when we're talking about real estate, 6 to 9 months is in the very near future. You're going to start to see, because I've seen this happen once before in my 20-year career, where this gap got to this size. In fact, at that time, it was about an $750,000 to $800,000 gap between condo pricing and freehold pricing. That what happens is that the average person cannot purchase the freehold property anymore. And for them to live somewhere, and if they want to own, they now have to get into the condo market. But it hasn't happened yet. And that's where the opportunity lies. Meaning, as an investor, you're going to see prices right now compared to in the next 6-9 months. Mark my word, prices will increase for the average condo in the GTA. In fact, the average condo in the GTA currently, it sits at $728,000. Okay? That's the average. We've had only about 2,000 sales of condos last month in April, right across the Greater Toronto area. And the reason is because more people pushed into the freehold market, because as condos had gone up in price, the gap was smaller. So for most people, a difference of $300,000 on financing, even though $300,000 sounds like a lot, but from a financing perspective, it was about $1,000 to $1,200, a difference on a monthly payment to get into a home. I'm not saying $1,200, $1,300, $1,400 a month is not a lot of money, but somebody who's purchasing and they're just looking at the difference of, well, I can own a condo or a home for a difference of $1,200, $1,300 a month. I'm going to move into a home because I'm going to get closer to that dream home of mine. And so we saw this gap widening. Now you're going to start to see more people look at condos as their first time purchase as the values have dropped. But as an investor, if you can get in before that happens and then take advantage of the increase that will happen over time, because it happens every single time, like clockwork, you could refinance later at a higher rate, at a higher value, pull out the equity, or not. Just leave it in there and rent out the property. Because as of right now, even with rates higher than we've ever seen them before in the last 10 years, you're still seeing rents increase. And it's quite simple why we're seeing rents increase right across the Greater Toronto area, because the cost of borrowing is so much. But what's also going to happen, and this is another beautiful benefit of owning real estate and renting it out, as rates decrease, you're going to see more people come into the market, which are going to be investors who rent out their properties, as well as people who right now are just sitting on the fence waiting for a decrease to happen. The next announcement happens in about 4 weeks from today, when the Bank of Canada lets us know what they're planning to do with rates. My guess is that they're going to still hold tight again, because as the inflation numbers have come in and we're seeing what's happening with unemployment, it's still very low, that the Bank of Canada is most likely still going to hold their rate, their overnight lending rate, which determines what the banks are going to lend out their money for. You're still going, at that point, if the rates do come lower when they do decrease, you're going to start to see more people come into the market, which now it becomes a seller's market again. Values start to go back up again. Those tenants stay tenants because the values have gone up. They're not able to afford it again either. So they stay tenants. So as an investor, you win. But the time to really win in real estate is on the buy side. Not when you sell. It's when you buy. Because the lower that you can buy, the better you're going to be off, the higher your return is going to be. And right now there is a window that real estate, specifically condos in Toronto and going right into the micro of Toronto, in downtown Toronto, we have more inventory currently either through the resale market, i.e. what's on the market for sale, as well as what's known as assignments. People who purchased pre-construction condos a few years back and now they can't close on it. We have more condos on the market than we've ever had, ever. And so you as an investor have this opportunity right now to pick up condos at a lower price only if you have your ducks in order. If you have the financial capability to do it and you have the stomach for it. And that is today's episode on all things market when it comes to real estate in the Greater Toronto area. As always, if this episode was valuable, share it with a friend. But I'm going to jump into our live 10-minute coaching call, which was won by one of our agents who actually has come to one of our workshops. I'm going to give him a call and let's see if he picks up. For you to get a free live 10-minute coaching call with me directly on the pod, all you got to do is go to ftguacademy.com/call. ftguacademy.com/call. Let's give our winner a call today. The good thing is I always practice double dialing. And if you're a winner, you know what time, my team would let you know what time we're approximately going to call you. Make sure you answer your call. Well, that's just how life goes sometimes. If you didn't pick up your call, sometimes you win and sometimes you lose. Clyde, you got something for me, brother?
Someone's commenting if he gets his phone number, and you want to call him.
100%. You want to just dial it so we don't give his phone number out to everybody in the world? You want me to use your phone? Or you want to just dial?
YouTube, so how can you...
Ask him to send us, if he's comfortable. Is he comfortable putting his phone number in the comments right now?
He just joined the giveaway, that's why. He just sent a message. He's joined the
Got it. So why doesn't he tell him, because I don't have access to our Excel sheet there. Tell him to send us an email right now. info@jazztacar.ca. To what's the person's name? It's a all right. Canadian Layman, I think, is the name. I'm sure that's not your first and last name. Do me a favor. Email me at info@jazztacar.ca. info@jazztacar.ca, and drop me your phone number in the email and your name. That would be greatly appreciated. And I'll give you a call right now live to our previous winner, Nitin. Buddy, you got to pick up your phone, man. Get a free coaching call with me to try to better your business. I think it's valuable based on what people tell me, but I guess it wasn't meant to be today. Let's see here if we got, again, for our friend who wants to take the live call, just send the email to info@jazztacar.ca with your name and phone number. Did we get any comments? Is he commenting there? No? Maybe he's jumped off. I'll give you another about 30 seconds. If this comes through, I will make the call. If not, we'll try to get you on episode 247. And for everybody who's watching and listening right now, maybe you're taking your dog for a walk or walking on the treadmill, I greatly appreciate all the support I get on all my social media platforms. But my mission for this year, for 2024, is to grow the Jazz Tacar podcast community. Do me a favor. If it's not valuable, that's okay. Don't share it with anyone. I wouldn't expect you to. But if it has been valuable, one nugget maybe you got from an episode that I've done, maybe it's the energy, maybe it's the good looks. I don't know what it is. Whatever it may be, I would appreciate you sharing the episode, whatever platform you watch on. It might be Spotify that you listen on Apple Podcasts. It could be YouTube. I would love for you to share it with a friend, and I'm not scared to ask, because that's how I've grown all my communities, either my real estate company as well as now my coaching company from the ground up academy. Okay, so I didn't get the email. Anyways, for everyone, again, if this episode 246 was valuable, share it with a friend. I look forward to seeing you next Friday, 10:30 a.m. Eastern, for episode 247.